Excellent. For a few more beeps. All right, we've got. Oh, okay. Someone.
Charlie Temple.
Yes, excellent. So today's session is a really important session that involves all of us, and you know it's on the first. All starts on the 1st of July. So our hosts today are Rest Super. Rest are our platinum partner and have been for quite a few years now, and they've wanted to come on board now and actually inform us all about Payday Super. So who we'll be hearing from today is Enrico Bergio. He's there in the screen there with Jade, and he is the GM of Public Policy and Advocacy for Rest. And he is going to talk about, are you ready? More importantly, are you ready for the 1st of July? What do you need to know now in order to start moving forward with everything? And you know, what solutions are there for us, and what can we do so that we are ready for the 1st of July? So there's a bit of content now. So I'm going to ask all of you, if you've got questions off the top of your head that come up, please type them into the chat. Lisa will monitor them, and then we'll get to them at the end. There'll be about 10, 15 minutes for everybody at the end. Other than that, I am going to go across to Enrico. Over to you.
Fantastic. Thank you very much, Helen and team. It's great to be with you all today. So I'm just going to share my slide deck and hope that the technology works. Excellent. Seems to be okay. Fantastic. So welcome everyone, and as I said, very happy to be here. My name's Enrico, and this is Jade from our partnerships team.
Hi everyone.
And we will be talking to you about all things Payday Super. So we will get into it because we've got a bit of content. Just bear with me. There we go. Firstly, we'd like to acknowledge I'm presenting from the lands of the Gadigal people of the Eora Nation here in Sydney, and I pay my respects to their elders, past, present and emerging, as well as recognising any First Nations people that are here today, and obviously the lands on which you all joined from too. And just by way of a kind of short disclaimer, today the information I'm presenting on is very much general in nature and is intended to provide information that you may want to consider for your own circumstances and needs, and just to consider that before taking any action. And as I'll outline, we're obviously more than happy, our employee support team, to speak to any of you and to provide any support we can on this journey we're moving towards on Payday Super. Okay. So what are we going to talk about today? So we'll do a bit of a recap of the fundamentals and what is Payday Super. We'll talk about some of the practicalities as to what that may mean for all your businesses. And then we'll look to a bit of a checklist as to some things you may want to be considering in the lead up to 1 July. So hopefully you'll come out of this session with some key actions for you to consider and a slightly clearer view of what the processes may look like and managing any kind of problems on the way through. And we'll make sure we leave some time at the end for some questions. So without further ado, we will get stuck into it. So what is Payday Super? I'm sure many of you would have heard of the change that's coming. To reiterate, the legislation has passed Parliament. It did take quite a bit of time to get through, and there are a number of kind of twists and turns, but the legislation has passed and we are starting on 1 July this year. And so that does require all employers to start making contributions on payday from 1 July this year. And also that the contributions, your employee super contributions, need to arrive into the correct superannuation fund within 7 business days of payday. So there was some discussion throughout the legislation process about whether it will be calendar days or business days. It is business days in the final legislation. So the requirement to pay on payday and to arrive within 7 business days. By way of also some introductory comments, there is this new concept of qualifying earnings, or QE, as I will refer it to. That is basically the new reference salary for your base calculations as to what super applies to. So we have this concept of a QE day, or a qualifying earnings day, which is effectively payday, and the day that you need to start organising those super payments through. And we'll go through as to what is in the definition of qualifying earnings, or QE. There's also a number of changes to the reporting of contributions. So that's through the single touch payroll, or STP system, which needs to happen now every payday, as opposed to quarterly, which was under the previous system. So changes to reporting as well. Employers will no longer need to send an SGC statement anymore, but as I said, we'll need to report both the qualifying earnings and the super payments through that single touch payroll system reporting method. The superannuation guarantee charge, which is the charge of the levy, obviously, which applies in terms of unpaid super and penalties. There are a number of important changes to those, and we'll talk about those in some more detail, but they will, under this legislation, apply earlier. They'll start applying within that, after that 7 business day period after payday. And the super guarantee charge is made up of the shortfall amounts, the unpaid super, notional earnings, so that is had the super arrived in the employee's account, what earnings would they start to receive investment earnings from that superannuation. And there's other kind of uplifts and loadings, and they can be quite significant, I want to reiterate. So they have been beefed up. So by way of an example, there's now what's called an administrative uplift, which could be as high as 60% of the shortfall in super contributions plus earnings. And importantly, I will mention at this point, and this goes to some of the tips and tricks, there is the ability to reduce any of those administrative uplifts or penalties if you self-report late payments through the single touch payroll system and before the ATO issues any SGC assessments. So the reduction is likely to be more, the more transparent you are and the earlier you start reporting. So obviously it's really important being on top of all your payments, making sure they get where they need to be. And fundamentally to this whole transformation is the speed at which will now all of us in this ecosystem be required to do business, and the importance of having solid data to do that. So that's a kind of a high level update as to payday super in its entirety, but we'll delve into a bit more of the detail in terms of what this means for you all. So we'll start by talking about this idea of qualifying earnings. So people would be familiar that under the previous legislation there was the OTE, or ordinary time earnings, concepts. So what has basically happened with this new definition is it's meant to being a kind of a catch-all and bring together all amounts that are superable. So it does include the old OTE, or ordinary time earnings, plus other components. So it includes salary sacrificed super, that is parts of your employees' OTE that they have sacrificed to super. It includes other amounts to which superannuation may also apply. So there's things like directors' fees, for example, or currently where there are sort of independent contractors, however they are, because they are principally provide labour services, superannuation does apply to them. So they're also those other kind of examples of superable type payments are captured up. So it's meant to be a overall high level new definition of qualifying earnings. So it's meant to, I suppose, make things very clear as to things sometimes could have been a bit unclear under the old regime as to what is sort of reporting through STP and the OTE definition. This kind of mops it all up quite cleanly. So you'll see in those two columns some examples that will all be pretty familiar to you as to what is in what used to be ordinary time earnings. It's now qualifying earnings. So obviously your base salary and wages for ordinary hours of work for your employees. As I said, salary sacrifice amounts that would have qualified under ordinary time earnings, commissions and bonuses, allowances, and certain types of paid leave. Not everything, but certain types of paid leave as well. And what is still not considered overtime earnings are the things you'd also be familiar with: overtime, certain leave entitlements, again, which some which don't fall under the qualifying earnings definition, expense reimbursements for your workers, and certain types of terminations on payments on termination or the end of employment. So it is a new concept, and it is a new concept to which the new reporting regime is tied. So it is important to kind of, I think, recognise that and make sure all our systems are, I suppose, up to date, which we'll go into further. So the second kind of key thing and key takeaway for your businesses is, as I said, the changes to single touch payroll, which is, as we know, the ATO's way of tracking wages, tax and super payments. You'll need to report this under Payday Super under the new system on payday, so as often as you pay super, whereas previously it was a quarterly cycle. So that's two things that need to be reported. That's the earned super for that period and the total super liability for the year to date. And we do know, the importance of some of these things mean, as we've got in the right-hand side, setting up, our systems and processes from the start is going to be more important under the new regime, given the speed in which everything needs to occur. So going through late or missed payments. So as I said, there has been a number of changes and I suppose beefed up penalties in relation to this, and the superannuation guarantee charge has been updated. And that is effective 1 July. That is in place under the legislation, and will under the law apply from that 7 business day period after which the super is paid. So the SGC, as you see on the right-hand side, that's the amount of unpaid super, interest on the missed super, which is the notional earnings, which the employee would have received had the super gone into the fund. This admin uplift charge, which is that 60% charge, up to 60%, which, as I said, can be significant. And there is an additional charge that's only applicable if the employer doesn't provide the appropriate choice of fund arrangements to an employee, which could also apply. So, these are significant penalties and are certainly strengthened under the legislation. So the importance of ensuring compliance is key. At this point, what I might just say, it's not on the screen, but it may have come up in questioning, but we're being asked a lot, well, what is going to be the approach to compliance, given these pretty significant changes that I'm going to today? So there has been some guidance provided by the ATO, helpfully, but I suppose what to make clear is the law is what I've just outlined. So that SGC applies after that 7 business day period. However, the ATO have said they will take a risk-based and facilitative approach to compliance within the first year of operation of Payday Super. So from the first year after 1 July. There is I can go into more detail around this, but there is some categorisation as to employers who might fall in what are called low, medium or high categories of risk. And, some of your behaviour and actions that you may take in response to the obligations may dictate where on that risk spectrum you may fall. But they have said that employers who do the right thing, who engage transparently with the ATO, who fix issues promptly, won't be the focus of compliance action by the ATO. So there is some comfort, I suppose, but these are arrangements they've said will apply for year 1. But of course, the law is always there. So we'll go through as well some of those kind of early visibility and engagement mechanisms that might be useful to minimise any charges under this regime. Okay, so here we are. So here are some of those mechanisms for avoiding the SGC or the charge. So as we know, until 30 June this year, the formal arrangements under the existing laws are still in place, being that quarterly due date after which SGC applies. So from 1 July, payment on payday must reach the account within 7 business days, and thereafter there's a potential liability for the charge. And there can be further late payment penalties, as I've outlined. So obviously that's the current mechanisms in the law as they apply. on the right-hand side, you'll see a reference to voluntary disclosure. So as I said, the SGC statement doesn't need to be lodged anymore. There's those new obligations of reporting under single touch payroll. You can make a voluntary disclosure statement. And I suppose the key message is choosing to make one can work in your favour. The earlier you disclose a mistake, the more the charge may be reduced by. And that voluntary disclosure can be made any time up until the ATO issues an assessment for any unpaid super. So that is one of the ways in which they've encouraged early engagement and visibility to minimise any penalties applying. Some other important things to consider for your businesses, and this is, I suppose, a key one, and there may be people here whose businesses do use the Small Business Super Clearinghouse, and you probably would have heard this, but it will be closed from 1 July this year. There were kind of previous suggestions of various extensions to that. That has been confirmed that that's not the case. So obviously, if you are one of those employers using that clearinghouse, you'll need to make arrangements prior to that time for a different solution. And the other, so that's in place. If you are making payment to self-managed super funds, it's a really important thing to make sure that that electronic service address, which is the main way you facilitate those payments, is correct and up to date. Otherwise, it can be obviously quite difficult under this new regime meeting those time periods. So I spoke earlier about some kind of practical tips on transition and preparation. One thing just to pause on and reflect on for everyone is whether there can be things done in place prior to 1 July that could minimise the impost. So, for example, super paid on salary earned up until the 30th of June, that's before the start of the regime, is technically due on the 28th of July. So that's 28 days after that quarter ending, and that depending on when your specific payday operates. However, anything that's relevant to the first payday after the 1st of July is payable on the payday. So you'll see that leaving the June quarter payment until the end of that 28-day period following the quarter could leave yourself in a bit of a mixed up situation where you've got some paid earlier and some paid later. So it's important probably to think about now what you're thinking of or planning for that final April-June quarter for this financial year. And what we'd encourage people to think about is to start planning early. There's nothing stopping people from transitioning to the payday super regime earlier, and doing so may both reveal any kind of unintended snags in your processes, but also may serve to be a bit clearer when we've got that transitional issue as to the final quarter for the year and the first payday runs of the new financial year. Another thing to think about is contribution caps. So that's if you have employees who may be close to reaching their super contribution caps, and the timing of the contributions may well tip them over. So if they're close to reaching the cap, and then in that first quarter of the next financial year, they'll have a number of additional contributions because of the way things fall. That's another important thing to kind of think about for your employees. On that though, in terms of the contribution caps, the recent payday super regulations that are the regs that underpin this legislation, they came out a few weeks ago. Government did announce at that time that there will be some technical amendments to ensure that individuals do not exceed their concessional contributions cap in the 2026-27 year as a result of this transition quirk to the new payday super system. So they've said there will be some grace and some ability to avoid someone exceeding their cap. However, we haven't seen the detail of that yet, and we understand that's still being finalised. We don't know if that will be a legislative instrument or if that will be ATO guidance. So that's one to look out for over the next few months as we head towards 1 July. The government has stated their intention as to some grace being there, but we don't know precisely how that's going to work. So there are probably some key things and potential pitfalls. Moving to payday in June 2026, can that be brought forward? Is there some benefit in doing that? to avoid some of those transitional complexities, and also keeping an eye out on this issue of the contribution caps and whether employers might tip over. Okay, so next, dealing with some key process changes that employers will see from us, from super funds, the super industry, because there are, as well as changes for employees, it's a big change for super funds as well, and we're working hard on making our whole contribution system work to really support employers and this new payments system and tighter timeframes for you guys. So we already have obligations around allocating contributions within 3 days, but from 1 July, we will also have to turn around and return any contributions that can't be applied within 3 days, whereas currently that requirement was 20 days. So we've got a much shorter period at our end to turn things around quickly. It's a big shift in the speed at which a contribution that we can't allocate, that can't be allocated by a super fund, will have to be refunded to the employer. And so the intent here is to make it possible for the employer to then check for any error and either correct the error or resend the contributions quickly, or get new details from an employee if that's required in the situation. Importantly, if you do need to obtain new details, then additional time applies to get the contribution into a new fund for that employee, which is 20 days. So that is one exception to that 7-day rule where you do need to get new details from an employee. And I'll also just outline the period that we now have to return contributions to you and flag any errors. Doesn't restart the 7-day clock at your end generally. I've outlined that exception where there's new details you might need to get from an employee, but if there's some simple error in the process, that doesn't restart the 7 days. So all of that back and forth that may need to happen potentially still needs to come within that 7-day period, including the obligations at the super fund end. So as a result of all of this, we're seeing a massive uplift in terms of clearinghouse processes, onboarding and payroll integrations, all to help employees meet these new timeframes. So I won't talk too much about it, but I will just mention that at REST we've really looked deeply at the challenges of Payday Super, and we have also launched our new clearinghouse solution called REST Pay, which we designed to address some of these key concerns of employers, including the simplicity of use, being Payday Super ready and with market-leading security, and has features like real-time contributions tracking and supporting of efficient workflows. So we did do that based on a pilot we did earlier with employers, and we've really learned a lot in that piloting process with employers. So we're really pleased on where we've landed with our clearinghouse solution, REST Pay, and of course more than happy to chat to any of you at any point in time on that solution that we've got. So next I'll outline what's changing for SuperStream. So we know SuperStream is the standards and infrastructure of how employers get contributions data and payments through to super funds, and it's how we get fund messaging back to employers if there's been some problem along the way. So there are a number of pretty significant improvements under SuperStream that the ATO has put in place that are going to really help in terms of some of these tighter timeframes. So one of those big changes is employers will be able to check a member's details with the fund electronically before you even submit the first contribution through. So that's that first box, the member verification request, or MVR. So that is definitely something to consider, and to definitely consider inbuilding into your onboarding processes, because if you have that check in place, you can obviously correct any issues or errors there are at the front end before the clock starts ticking on that first payday and super contribution requirement. Secondly, any error messages that go back to employers where we haven't been able to allocate contributions will include a lot more information on the errors, so you'll be more able to accurately identify where the problem is and start fixing it. So that's better error messaging, which again is another significant uplift. Thirdly, we've got a new service again under SuperStream called the Fund Validation Service. Basically, it's a fund lookup service where you'll be able to see more information about the funds for sending contributions through to, details for making payments to funds under the new payments platform as well, which is the real-time payments platform. So that's a new one to make sure you've got the correct fund details in there, and that can be important where there's been, things like mergers of funds, of super funds or the like. And also important to mention under the new arrangements, under the new Payday Super arrangements, funds will need to accept contributions under the real-time platform standard. That's the real-time system from 1 July as well. And that will also, again, speed up this whole process with the new timing requirements that we've got in place. All right, so we'll look now at a bit more as to what can be done, I suppose, pre-1 July, and then when 1 July comes along to start preparing for this significant change. So, probably the key thing to take from this presentation, I think, is the importance of the right information when onboarding new employees and getting, correct details from them as well as super fund information. And this, the tighter timeframes on all aspects of the processes mean that accurate information, as we know, is so critical. And we know that can be sort of challenging up front in terms of getting all that information and onboarding, but it does kind of save you the time and potential impost at the back end. So things that can be done now, making sure the systems and processes are efficient from onboarding to contributions, looking at, for example, how you're managing return contributions now, how you might be considering uplifting that. Will you need additional resourcing for this transition, or is there technology in place that can support the transition appropriately? Obviously aligning, looking at the concept of payday, which carries more meaning, and aligning pay cycles for all employees with, better sequencing. So obviously we know there are limitations on this. Many paydays are kind of fixed and specified in things like, modern awards and enterprise agreements. So, changing payday may have limitations for you in terms of some of those things. But it's important to look at how you can best sequence your pay cycles and design a pay cycle that works for you across all your sort of business areas. Obviously, practicing and doing a dry run at some of these systems prior to 1 July could be something useful for you to do, and that means, as I've said, there's nothing preventing you from starting these systems and starting paying on payday pre-1 July. To really embed it into your system. And obviously, keeping up to date, there's, still some, changes coming through. There's what I mentioned about concessional contributions and what transitional arrangements there are there, but there's still things kind of settling down, even though we're sort of 3 and a bit months away. And so I think staying in touch with your providers, whether that's your payroll software, your STP providers, and obviously super funds, understanding everyone's transitional arrangements in the ecosystem, and making sure you've got all that intel to put into your processes. And obviously from 1 July, we've got our checklist there. So, it's really just a recap on the obligations, making sure those super contributions are received by the fund within 7 business days after payday, using this new definition of qualifying earnings and the associated reporting of that, reporting the QE, the qualifying earnings and your SG liability through STP on payday, and just being mindful as well of that new arrangements for the super guarantee charge that will apply from 1 July. All right, so again, just finally some kind of key takeaways, just to really drill the message home. Thinking about reviewing your end-to-end processes, and return contributions are kind of one example. They are a common example, but they're one example of where things can sort of go wrong in the process of super payments. But there are others, and so I suppose being really familiar with those processes before 1 July and fixing any issues. Ask your providers if they're ready. That software providers, clearinghouses, super funds. Obviously, we're here to support any employers and to communicate further what we're doing at our end. And that switch over on the 30 June, 1 July period, looking at the contributions cap issue that I've outlined, looking at actually the timing of payday and what changes there could be there to minimise impost, are all things to start thinking about at a kind of practical level in the lead up to the 1st of July. All right, well, we've managed to fly through some of that content. I'm very conscious there is probably a lot of information in all of that for you. So more than happy to really answer any questions or just any kind of comments, or for anyone to, share any experiences. If it's not a question, just sharing some experience about how your business might be thinking about this, including particularly the transition, would be useful understanding. But yeah, really your time for any questions, comments, queries. I will put up, that's just a QR code where you can find out more about Rest for Business, which is our support service for employers, and you can, there's a bunch of information materials on there, as well as obviously, booking in with one of our reps to speak to them. And we're more than happy, as I said, to speak to you guys at any point in time. But Helen and team, perhaps I'll stop talking there and take some questions.
Sure. Yep. Who's got a question?
All crystal clear.
Feel free to take yourself off mute and ask. Or I have one here that someone sent to me. Can you talk us through, Enrico, why some contributions might be returned and what will or won't change with the new validation services?
Yeah, great. That's a very good question. I should have gone to this in more detail, but look, in short compass, there are many reasons a contribution can be returned that people would know well. So it can be obviously things like errors or the incorrect tax file number, date of birth, member account number, some of those basic details which could cause a return. It could be that the account at our end is closed or inactive. As another example, obviously for SMSFs, there's their service address for the SMSF, and that could be incorrect. But essentially, any one of those things that don't match at our end, or some other mismatch in the payment and data material that we've been sent under SuperStream, could cause a return. So there's a number of different kind of reasons. So those two services, particularly the member verification request, which is ultimately it's a pre-check, a trial run. Very much encourage you to think about that, particularly in the kind of onboarding workflow processes you might have to fix any of those errors that could come up in that check process. So that's an easy way, as well as the fund validation service to check things at the super fund level. So there, I think, some pretty positive developments that the ATO has put through to help support the Payday Super transition.
Any more questions? Surely we've got some questions.
Don't be shy.
Mhm.
There you go. There's one in the chat. How much more work is this check likely to be?
Yeah, that's a great question, and there's no kind of black and white answer to that, because I suppose everyone is a little different in terms of their level of preparedness, awareness of Payday Super. Obviously, the earlier you can start working on it and break down the work into kind of bite-sized, kind of digestible chunks, the better. And also, everyone has different systems and processes, different clearinghouses, payroll providers, etc. So there's not a black and white answer to that. I think it's fair to say there is some work involved in this, obviously. It's definitely something we hope people have turned their mind to, or if not, we'll do so pretty quickly. And important thinking about, what temporary kind of resourcing there might need to be to support the transition, which is really, now for, 3 and a bit months onwards till 1 July, or other technology solutions that you might be able to use and leverage. So, I think the earlier you can think about it and plan for it, particularly the transition, the better. Continue. Obviously, more than happy at Rest to speak to any employees about that too. Maybe I'll just ask a question, which is novel, but and we can even do it by a thumbs up or thumbs down. But I suppose, maybe we'll do thumbs up. I feel very, very prepared for Payday Super. Kind of maybe that way for like midway, or that way for not at all prepared. Is there a general kind of sentiment of, how comfortable everyone's kind of feeling in relation to this transition at a high level? Or feel free to come off mute and speak up as well. That's a good one. Should have thought of the emoji react. So I think we got a couple of
few emojis there.
I'm going to do it to you.
Yeah, emojis is always better. So got probably 3 or 4
thumbs up.
thumbs
Yep.
up. We've got a couple of not so sure faces, I think. So that's kind of a pretty even mix. And that's, to be honest, that's kind of reflective of what we're hearing. People are at different stages of the journey. Hopefully this webinar's kind of got it back on the somewhere towards the top of the to-do list. Prepared as the franchisor, but not really in regards to helping our franchisee. Yeah, that makes sense. Yeah, and obviously, again, more than happy to point people in our direction and for us to speak to franchisees if there's particular, individual challenges they face as well.
That's good. I definitely suggest you get that QR code on your phone. I just went into it and it's specifically super for franchising. So Rest has got a landing page specifically for franchising. So it'll be more geared towards our businesses. Is there another question?
Paul T made just a comment.
Franchisees need to be financially prepared as well.
Yeah,
that's valid statement.
Yeah, I agree with that. Absolutely, definitely at the franchisor level and franchisees. So the more we can do with those resources, or through just a chat on the phone to help, we're happy to.
Does anyone want to share what they've done for their franchise partners? Just a quick tip, something that they've already started doing. I know that when we were in Canberra, some of the franchisors shared that they've already, from January, they changed their pay cycles, so that everyone was on the same pay cycle, and so that they were getting used to paying super on the pay cycle already. Is anyone else doing that, or?
No.
Thanks,
John.
Maybe one thing is that that question around the transition, and where you've got those different time periods for the final quarter of the old financial year, and then you've got payday from the new. Has anyone thought about any adjustments to kind of streamline that, or is that still kind of in the mix of your current thinking?
Not sure.
Nobody's thought about it yet.
I'll take that.
We've also got
thinking about it.
Sean. Thank you, Sean. Yeah, reminding that if a franchisee doesn't pay super, the franchisor can be liable. We have had examples of that of late. Provided a fact sheet and also provide talks at group meetings. Oh, okay, great.
Right.
So
we've done group meetings as well as
Oh, Robert,
Sorry about that.
Robert?
We bring it up at every group meeting, but we've also been sending out fortnightly reminders and updates and links and talking about the fact that they've got to also look at their cash flow.
Yes, absolutely.
Yes.
Yeah, that's a great point on cash flow, and something definitely to kind of model, and another reason to kind of potentially consider bringing it forward and doing a dry run of how that kind of could work at a practical level. So yeah, absolutely.
Right. Okay. So we've got a franchisee has said that they started it themselves a few months ago. Again, putting the pay cycle and the super at the same time, but their franchisor hasn't. Interesting. More.
Good one, Charlie.
Thanks, Charlie.
Good bonus.
Yes, there is an event on in the city next week. I'll be there.
And it's on this subject. It's on same job, same pay, and payday super as well. So
Yes.
whether we'll quite be as good as Rest, I'm not sure, but we'll do our best.
Do your best, same as Rest. Well, I think at this point, what I'd actually like to say is thank God we have Rest. that they are, with us to help us. And on that note, Enrico and Jade have both said that if you send your details to Jade, Lisa's about to type in her email address. You can have a one-on-one conversation with someone at Rest and they will help you with any questions you have. So that'll be open. If you don't jot down her email now, when I send the recording, I'll send the Jade's details to you. And depending on what you ask her, she will triage to the right Rest person as well.
Yeah,
but no questions silly, even if you're not with Rest. Just ask them questions. That's what they're here for.
Absolutely.
Excellent. All right. Well, thank you very much, Enrico. Much appreciated. All that was a lot of information.
Thank you for having me. It's been a pleasure.
Yeah, we have to keep hearing it. And so in next fortnight, our next Lunch and Learn is on April the 1st. So don't believe everything Kochi's going to tell us. That's for sure. But we're going to talk about, financial reporting, from bookkeeping and accounting. So another exciting and interesting topic. So look forward to seeing you all online then. Thank you so much for taking your lunch break out. Charlie, you were really enjoying whatever you were eating. Thank you very much. Yep. See you all soon. Oh, hang on. What do we got? What have we got coming up?
Don't forget the expo.
We've got a Queensland event coming up.
We've got Brisbane Expo this weekend. On Friday night, we have, not night, but Friday afternoon, we have a get-together with the Queensland Committee. And any other plugs anyone wants to quickly add in before we stop? All right. Thank you very much, everyone.